As of the close of trading on Friday, May 8, 2026, Advanced Micro Devices Inc., or AMD stock, is priced at $455.19, marking a staggering intraday surge of 11.44%. The market is currently closed for the weekend, but that closing figure represents a historic peak for a company that many thought would always play second fiddle to its larger rivals. While most of the market expects the primary fuel for chip stocks to remain high-end graphics processing units, the real story moving the needle right now is something much more fundamental. AMD just proved that the central processing unit is not only relevant, but is actually reclaimed as the backbone of the next generation of data center infrastructure. By crossing over $10.25 billion in quarterly revenue, AMD has officially signaled that the hierarchy of the semiconductor world has shifted. The common belief among investors is that if you want to play the artificial intelligence space, you have to look exclusively at specialized accelerators. People assume that standard server chips are a commodity business with slowing growth. However, the reality we are seeing in the latest trading sessions is that AMD is successfully challenging that narrative. The company is now projecting a server CPU market that could exceed $120 billion by the end of the decade. This is far beyond what most analysts had in their models just 6 months ago. While platforms like Robinhood and Interactive Brokers saw a flurry of activity around the typical names, the institutional money is clearly moving toward AMD as it bridges the gap between traditional computing and advanced AI workloads. This creates a fascinating tension because while the hype is in the GPU, the massive stable growth is actually happening in the EPYC processor line, which just helped AMD overtake Intel in data center revenue for the first time in history. Looking at the immediate price action, the volume we saw on Friday was nothing short of extraordinary. Over 58 million shares changed hands as the stock cleared its previous resistance levels. Many traders using the Fidelity mobile app or the Robinhood app likely saw the initial 6% pop in the morning and expected a typical midday fade, but the strength held all the way into the final bell. This wasn't just retail momentum, this was a fundamental re-rating. When a stock jumps 11% on the back of earnings that were already teased, it tells you that the forward guidance actually shocked the professionals. The expectation was for a solid year, but the reality is that AMD is now looking at a 46% year-over-year growth rate for the coming quarter. This kind of acceleration is rare for a company of this scale, and it is forcing everyone from individual brokerage owners to major wealth managers to rethink their tech allocations. If you are following the sector through tools like Schwab Intelligent Portfolios or managing a self-investing strategy, the question always comes back to valuation. AMD is currently trading at a high price-earnings ratio, sitting near 149. This usually scares off conservative investors who prefer Fidelity mutual funds or established Fidelity ETFs with lower volatility. But the tension here is between the current multiple and the projected earnings power. If the data center segment continues to grow at 57% annually, that high multiple begins to look a lot more reasonable. We are seeing a massive shift in how these companies are valued. They are no longer being treated like cyclical hardware manufacturers, but like high-margin software platforms. This is why you see so much interest in online investing sites right now. Everyone is trying to figure out if this is a bubble or a fundamental reset of the entire tech landscape. The internal mechanics of AMD's business model are also evolving in ways the broader public might not fully grasp. While the Ryzen chips for laptops and desktops are what most consumers know, the real power is in the instant GPU line and the EPYC server chips. These products are being integrated into massive cloud clusters by every major provider. What makes this interesting from an online investment perspective is how AMD is positioning itself as the open alternative to its main competitors. They're focusing on flexibility and energy efficiency, which is becoming the top priority for data center operators who are literally running out of power to fuel their AI dreams. When you look at your Interactive Brokers trading platform and see the massive green candles for AMD stock, it's a reflection of these massive enterprise contracts that are finally starting to show up in the bottom line. Comment below how many shares of AMD stock you currently hold, or if you are planning to add more at these record highs. I am curious to see if the community thinks this rally has more room to run, or if we are due for a sharp correction. To understand where we are going, we have to look at where AMD came from. This company was founded back in 1969, and for most of its history, it was the scrappy underdog struggling to keep the lights on while competing with the dominant Intel. There were years where the stock traded for less than a cup of coffee. But under the leadership of Lisa Su, they executed one of the greatest corporate turnarounds in American history. They stopped trying to beat Intel at their own game and started focusing on a modular chiplet architecture that allowed them to scale performance faster and cheaper than anyone else. This history matters because it created a culture of efficiency that is now paying off as the demand for compute power hits a fever pitch. Investors using SoFi Active Investing or Fidelity brokerage accounts often forget that just 5 years ago, AMD was a fraction of its current size. The transition from a PC component maker to a global data center powerhouse is the defining story of this decade in tech. The broader market environment is also providing a tailwind that many didn't anticipate. With the recent jobs reports showing a stable economy and inflation fears cooling slightly, risk appetite is returning to the tech sector. This is benefiting the entire semiconductor space, from Nvidia stock to Apple stock, and even the more traditional players. People are moving money out of defensive positions and back into growth.
If you manage your own money through SoFi Invest or a Fidelity IRA, you've likely noticed that the best performers recently have been companies with clear, tangible links to the AI infrastructure build-out. AMD fits this perfectly. Unlike some speculative software companies that are promising future results, AMD is shipping physical silicon today and getting paid billions for it. The reality of their cash flow is finally catching up to the expectation of their potential. Looking ahead, the catalysts are quite clear but carry significant risks. The launch of the next-generation MI450 series accelerators will be the ultimate test of whether AMD can truly compete for the top spot in AI training. If they can capture even 15% of that market, the current stock price might actually look cheap in retrospect. However, the risk of a supply chain hiccup or a sudden shift in enterprise spending can't be ignored. We are also seeing a resurgence in the CPU market, with even Intel showing signs of life. This means the competitive landscape is getting crowded again. For those who enjoy self-investing or use Robinhood crypto and stock tools, the volatility is part of the game. But for a long-term holder looking at Fidelity wealth management strategies, the focus remains on whether AMD can maintain its technological lead in chiplet design. In summary, the narrative surrounding AMD stock has transformed from a story of survival to one of absolute market leadership. The expectations were that the company would remain a distant second in the AI race, but the reality of their 57